I'll turn things over to you.
Sounds good, Raleigh.
All right, folks. Well, our next presenter is Hubert Senters, and he is one of the leading active investors and trading professional traders in the world. His research is followed by nearly 100,000 people on a daily basis, and he's best known for his down-to-earth approach for trading and investing, which is both effective and, quite frankly, very refreshing. Hubert is a regular contributor to CNBC and Bloomberg and Fox Business and other financial media outlets. He holds a Series 3 and 30 license and is a principal at Razor Trading Holdings, and he lives in Kentucky with his active family. When he is not trading, he's usually at one of his kids' various sporting events. And so with that, please join me with welcoming Hubert to the room this morning and his presentation on the death of fundamental analysis. So with that, Hubert, the floor is now yours.
Thank you, Raleigh. Thank you very much. So I'm going to throw you a little bit of a curveball here. I was planning on coming here and doing the death of fundamental analysis, but bonds are going crazy. So if you guys are okay with it, I will share with you how I'm trading bonds and doing very low risk reward type setup. So let me show you an example here, because I want to at least get approval, because you guys probably signed up to watch me teach you the death of fundamental analysis. In this one trade in bonds right here, I'm up $2,562. I only risked on this entire trade, I only took a risk of $156. And you can see right now, I have a trailing stop of $2,000 profit. So if you, as a collective group, will just give me a yes in the chat box, that'll let me know that you're cool with me teaching you how to do that. And then also, right before I came in here, I threw on a counter trend trade in the 10-year note where I risked $78 and we're up $125. So if you are good with that, I'll do that instead of death of fundamental analysis. Yeah, voice is breaking up a little bit. It's probably an intermittent internet issue or all right, so we're good to go. All right, cool. So let's do this. I'm going to teach you how to risk $156 to potentially make $1,000. That's a little bit of a white lie, though, right? Because on this trade here, we've actually locked in $2,000. So just keep that in the back of your head. It's ideally the sweet spot is how to risk 156 to make 1,000, but you can always make more if you hold on to it a little bit longer and let it act like a crock pot. So, like I said, now here's the bad news, right? Like I'm locking in 2,000 on this trade earlier today or last night. I was up 3,500, so I've given back from 3,500 all the way down to 2,593. So don't cry for me. I swear it's not bugging me at all. Because my overall target up here on this trade is up here for $5,000 and a target of 145 and 31 seconds. So I'm risking $156 to make 5,000. So if I only make $2,000, I'm not going to cry about it, right? All right. So let's start off in this PowerPoint right here. So first I have to give you a warning disclaimer. I am actually registered. I am a series. What am I? I'm a series something. I am a series 30 and I'm a series 3. A 3 is required for me to be registered, and a 30 is just a branch office. The reason I am registered is because I like having super dirt cheap commissions. And if you open up your own brokerage firm, you have to be registered. So I opened up our own professional futures brokerage firm in order basically for us just to clear our own self so we get dirt cheap commissions. I also am a member of the Chicago Board of Trade, which means I just have a seat on the exchange. And that also lowers my costs. So when you think about retail traders, there are retail traders and there's professional traders. Really the only difference between the two, as far as the label, there's a couple different ways you can look at it. Number one, I have to pay professional fees. Number two, I get cheaper commissions. And number three, hopefully I'm more profitable, right? That's how the notion goes from retail to professional trader. Although I know some really super successful retail traders. So you should never trade with more money than you can afford to lose. You should only trade with the discretionary income. Since I'm registered, you're going to hear me say probable, potential. You'll never hear me say guaranteed unless I just guarantee you, a guarantee like on a purchase of a product or something like that. So just give me a visual yes so that you understand that I'm trying to talk you out of trading and not into trading. Because if the NFA audits any of this or the CFTC, I don't want to end up in an orange jumpsuit in a federal prison with Bubba somewhere. I don't think it would do well for me or Bubba, so I just try to warn you away from trading. Hopefully you figure out how to do this, and hopefully you don't lose your life savings. A lot of people try it, and a lot of people lose money. So be careful. Only trade with discretionary income. I make a little bit of a joke just to go over the top and go, your trading career may end up like a bad country song where your wife will leave you, obviously because she hates you. They're going to repossess your truck because it's a country song. They're going to come take your home, which is a trailer, and your kids are going to hate you too. And your dog probably dies, right? Your dog dies because I've never heard of a cat in a country song. So let's move on. So my name is Hubert Senters. This is my no BS approach to trading and investing. Here in this screenshot, all I'm trying to show you is, look, if this redneck from Kentucky, from the backwoods of Kentucky and the hills of eastern Kentucky, can do this and become a multimillionaire, you ought to be able to do it too. Now, heads up, you're going to have to work your ass off. And it's going to be a lot of hard work. And this is not a get-rich-quick scheme. And it's not going to be you just click a button and you make millions and millions of dollars. It's just not that way. You have to put in your time. You'll be like an overnight success like me. I've been doing this for like 22 years. But if you get around other successful, wealthy, and driven people, some of that stuff will rub off on you because they'll give you some good advice that you can then take and put into place, okay? So this is a picture of me and Paula. We were in a mastermind, and we give Paula some business advice, and she's just the sweetest lady ever. She's actually about 6 inches shorter than that because in a picture that I was posing with her, she's got 6-inch heels on. Super nice lady. This is Richard Branson. I help him with his charitable foundation and stuff, Virgin Unite. Really cool guy. I always joke like Richard's older than I am, but I got more chins than he does. We both suffer from dyslexia, which is cool. And then here is Mr. Wonderful. He was at one of our masterminds. Mr. Wonderful is actually kind of evil. He will just gut a company if you allow him to do it. And then this is Dave Ramsey, and Dave and my companies work together on a couple projects. So, and this little square head, this little catfish head fellow right here, this is me. I never wear these suits except when somebody wants me to do a photo shoot for some very odd reason. I don't know why. The microphone that I'm talking to you on right now is this little baby right here. And then I'm actually standing up in front of my stand-up desk in front of these 6 24-inch LCD screens, which is powered by one machine, and I'm just surrounded by PCs. I know what they're going to find out in the near future is, number one, these things cause brain cancer or testicular cancer, and I'm totally going to be screwed because I'm surrounded by them all day long. There's going to be some study that comes out like that. I just know there is. So congratulations, you are in the right place at the right time. And the reason I'm saying is not to sell you on any particular thing, but bonds are moving right now, and they're actually fairly easy to trade if you know what you're doing. So first, we're going to do a little bit of a math question. But before we get started, I'm going to come out of this fleece because I don't know why, but when you start talking, I start getting excited and I start getting hot. I don't know why. It's kind of weird. Let's go through a real quick informal survey. If I was going to show you a trade that only worked about 30 or 40% of the time, would you be interested in that trade? Like if I said, hey, I got this trade, it only works 41% of the time. Let's do the quick math. Would you do it? A lot of you are saying yes. Oh, George says no. All right, depends on the return. Yes, we got a lot of yes. No. Dave says no. Maybe. Matthew says no. Michael says yes. Richard, no. All right, awesome. So this is going to be cool. So that's perfect. So let's do the math first. So like I said, this trade only works 41% of the time. And that's just terrible, right? Not really when you think about it. If you do it like me and all my buddies, which we call ourselves unicorns, us guys that make money in the markets, if I'm going to risk one, where's my pen thing at? Let's say if I'm going to risk one to make 5, how many times in a row does that thing have to actually work in order for me to make money? It only has to work 1 time out of 5, right? So what we're going to do is we're going to do a risk where we're going to risk $156 to potentially make 1,000. So here's how it works. We're going to say we have a series of 10 trades, and we're going to say out of 10 trades, 6 of them are going to be losing trades, and I'm going to lose 156 times 6 is going to be a loss of $936, right? So I'm just doing awesome at this case in this little 10 string of trades. So now let's go to the next one. Let's say I have 4 winners. Out of that 10, I've had 6 losses, and then I've also had 4 gains. At $1,000 a pop, that's a $4,000 gain. That's not too shabby. Now, if we do the math and we go, okay, 4,000 minus 936 equals $3,064. Now, if I was going to show you, now let's do the math again. If I was going to show you a trade that works 41% of the time, would you be interested in learning how to do that trade? Answer should be yes, right? Because that trade only has to work how many times out of 10 in order for you to make money, right? You see the distinction between a high percentage trade, which I'm going to call BS on just about everybody that talks about high percentage stuff. They don't withstand the test of time. Usually what you're better off doing in almost every situation is have a very good risk to reward ratio and not care too much about what the actual percentage of that trade setup is. So I can show you a trade that works 98% of the time, but it loses money because it's got a huge risk to reward ratio upside down, right? So, percentage win rate is important, but it's just not as important as risk to reward ratio. So let's say this thing's worse. Let's say, all right, well, I can't, that's just terrible. I'm not going to be able to do that. Let's say you've got a string of trades and we've got 10 trades, 7 losers in a row times 156 loss. We're going to lose 1,092. And then the other 3 trades, we're only going to make 1,000. So we're only going to make 3,000. Now, if you just do simple math, you can say, you're going to make about $2,000 on this trade. Now, that's if you only go for 1,000. If you increase your average ticket, and your average ticket, just think about this like a business. Let's say you had a series of 10 trades, and then every trade you made $1,000 on. All right. Now let's just say out of those 10 trades that you let 5 of those run to the $2,000 mark, then what that's going to do is that's going to increase your average ticket on your trade to about $1,500 profit instead of 1,000. So we're going to focus on teaching you how to do that. All right. So real quickly, which level are you at right now currently? Number 1 level is where most of us all start out, and we get really, really effective at losing lots of cash really quickly. Anybody ever been there and done that? It's the most painful stage in the market, and all you do is you just want to kill yourself. And you're like, oh my God, why am I so stupid? Why is this so hard? You're just like, oh my God, everything I touch to turns to the poof, dust, right? You're like, I could burn this stuff quicker. And then stage 2 is you get really frustrated. You're like, all right, I'm going to slow down the burn rate. I'm just going to get really effective at losing a little bit of money. All right. And a lot of people end up figuring that out fairly quickly. Where a lot of folks get stuck is where level 3, they get hung up on level 3, is they tread water where they'll make a lot of money, lose a lot of money, make a little bit of money, lose a little bit of money. Or they'll make a lot of money and then they'll die the death of 1,000 cuts by just giving a little bit of it back at a time. What this trade is designed to do is to get you from stage 3 and to get you starting on the level of stage 4 where you consistently make some cash flow, okay? Now, make a killing has an asterisk. I'm registered. I don't want to go to prison. A killing to you may be something totally different. At level 5, you always are trying to learn more and become better at what you do. So real quick, where you at? Are you at stage 1, level 2, level 3, level 4, or level 5? In most webinars, in most cases, I get more 3s than I get anything. So let's talk about getting you from level 3 to level 4. There's 3 main methodologies that folks trade with. Methodology 1 would be like that stage 5 where you lose a lot of money, and then just as soon as you make a little bit of profit, you're just taking the profit off. Anybody been there and done that where you had such a massive catastrophic loss that then if you just make $200, you're like, I'm out. And the reason you do that is because you have the mental residue of that memory going, oh God, that stung a little. That left a mark. Okay, I'm up a little bit. I'm gonna take it off. Anybody ever done that before? I can't be the only one that did that. And then you just then you get another loss. And you're like, okay, I got to take this because if I don't take these profits quickly, it's going to turn into this thing right here. And then level, methodology C is like this, where you have a huge loss, and then you have little losers too, and you just die the death of 1,000 cuts. So that's methodology C. And method B that I'm going to teach you here, it works like this, and this is how I try to trade almost every day, day in and day out. Now, some days it works better than others. I'm not going to sit here and blow smoke up your ear and tell you I make money every day. I don't. I don't make money every month. And there's some years I lose money. Oh, God forbid, right? But I usually make more money than I lose over the long haul. So This is how I try to focus, and if you focus this way, it'll probably help you too. So what you're looking for is I'm looking for little loss, little loss, little loss, bunch of little losses. Oh man, now it's starting to hurt. Little loss. And then I'm looking for a huge risk to reward trade. And then I'm looking for a bunch of other little risk to reward ratios where I'm taking very small amounts of risk for huge gains. How many of you do method A? How many of you do method B? And how many do method C? Like, where you at? What are you doing? So we've established most are at level 3. And then what is your methodology of trade? Are you A, B, or C? All right, so we've got a B, A. We got some 3s, a D. We got a D. David, that's not even a choice. You're done. B's. All right, so we've got more A's than anything. All right, interesting. So let's talk about a way to kind of fix that. Now, before we do that, I'm going to tell you a little story called Aesop's Fable, where there is this frog and this scorpion, and the scorpion is trying to or I should say talk into, right? Talk the frog into giving him a ride across the river to the other side of the shore here. And the scorpion approaches the frog and goes, "Hey, man, give me a ride. I'll hop on. I'll swim over there. I'll be able to hunt." And the frog's like, "You've lost your mind. You just want to sting me and eat me and kill me." And the scorpion's, "No, there's no way I could possibly get over here. There's nothing else to hunt over here. It's just barren wasteland. I just need to be to the other side. I promise I won't kill you and eat you, because what would that do? After I get done with you, I'm still going to starve to death." Evidently, the scorpion has some mad influence skills and talks the frog into letting him on his back. As they're about halfway across right here, the scorpion stings the frog in the back, and as the frog looks up and goes, Why did you do that?" And the scorpion goes, "It's in my nature," as they both sink to their death. Now, the reason I tell you that story is to tell you this. If you are trading something that is wrong for you, if every time you get in it, it comes and hunts you down and tries to kill you, or it stops you out, you're probably just trading the wrong thing, all right? Very easy to fix. Find somebody that's got some experience over you, has been trading longer than you, and say, "Hey, how does that market work? Does that thing trend well, or is it choppy?" So what you want to do is you want to find the best thing for you to trade. Now, if you go about it and you go, hey, if you ask your broker, which everybody knows brokers are good for just about anything, they don't call them brokers for nothing, right? Brokers will make you broker. I've never met a broker that's made me money, right? So it's up to you to make your own money. So if you go about and just do an informal survey and you go, what's the best market to trade? A lot of folks will tell you, like, oh, you should trade the S&P minis, or you should trade stocks, or you should trade options. Everybody trades those things. Then what you find out is, the reason they want you to trade them is because they get commissions or they have huge volume, right? And that's an interesting way to answer that question. Then what happens is you trade that product, whether it's stocks or options or E-minis, you get chopped up, and then you start to ask yourself, what's wrong with me? Why can't I do this? And you start going, I'm smart, I'm successful, this thing's too daggone hard, it must be rigged. Yeah, maybe, maybe not. But if you take a look at, people that do poker tournaments, the same people gravitate towards the top of always finishing. Same thing in trading. The folks that make money, we always gravitate towards the front of the pack. And it's not because it's rigged and we know the secret. We're just like, okay, well, I'm going to play my game instead of playing the market's game. So what happens is you go from product to product and you try to chase which one works for you. So the bad news is you've been betrayed by the overall market and everybody that plays it, but it's not your fault. You've been lied to, and you're sitting there going, daggone it, who is it? Who lied to me? Well, they are, other traders, other media, investors, passed down from generation to generation. Did you test which market is the best for you to trade? How many of you actually in here have done some real hard studying going, okay, that market makes sense for my personality and style. This one over here would be like the death touch. Like this one just drive me crazy, and there's no way I could possibly do it. So first what you got to do is you can trust what other people tell you, but you want to verify it. I would use that with me also. You can trust what I tell you, but verify every single thing that I tell you so that you can make sure that it meets your trading personality and style. So true or false, real quick, just give me a quick answer here. True or false, if you can trade, you should be able to trade any market. What do you believe to be true? True or false? If you can trade, you should be able to trade any market. Do you believe that to be true, or do you believe that to be false? False, 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 true, true, yeah, false, true. So a little bit of mix. So I would say that's overall true, but, and here comes the big but. And every time somebody says but, you know the other shoe's about to drop, right? It's kind of like your girlfriend saying, no, no, it's not you, it's me, right? It's a lot easier to trade something that matches your trading style and personality. Have you ever been in any situation where you're just in the zone and you're like, man, I can't believe I just did that. That was just very, very easy to do. Same thing in trading. You've probably been in a situation where you're like, man, I cannot trade. I can't fight my way out of a wet paper bag today, right? I know I've had days like that, and you're like, God, everything I touch is a loss today. And then there's other days where you're like, man, all these are. I'm getting stopped out on a few of these, but these other trades are working really, really good. So it's really important. If you don't match your trading style to the right market, it's going to be very, very painful and very, very frustrating. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. So think about this statement. Is there anything wrong with trading better faster? Now, I'm going to go out on a limb here and tell you there are no shortcuts to long-term success. But is there anything wrong learning the tricks of the trade and figuring out, hey, this market would probably be better off for you right now? Well, this market over here, just stay away from it because it's hard to trade. So, like, there's certain markets that are tailor-made for individuals to trade just because the personalities are actually like humans. And you're like, oh, crude oil's really in a bad mood today. Oh, gold's really happy. Oh, bonds. Bonds are the grandmother market. They're very nice and calm. It's very boring. It's like watching grass grow, but you'll laugh all the way to the bank. So how do you pick the best market to trade? So the first thing you want to do is figure out what the ATR is. And the ATR just stands for the range, an average true range. All right? Average true range just means this thing's going to have a low of X and a high of Y. So in other words, the Dow, and this is an old snapshot, but it doesn't really matter what these numbers are. What you want to know is what's the daily ATR, and I'm using a 14 period. So for the Dow, it's about 93 points. The Dow, every point's worth about $5, so you're going to make or lose $465 in a day. Now, do you believe you're going to get from the dead low to the dead high today? No, probably not. Odds on you getting the dead high and the dead low today are slim to none. But you'll probably be able to get the meat in the middle, so you'll be able to get about 50% of that move. Same thing with the S&P. S&P, about 10 points times $50 a point, you'll make or lose $515. NASDAQ, 25 points, it's worth $20 a point, you can make or lose $518. Russell, about 10 points, it's worth about $100. You can make about an even grand. Only problem with this, 1, 2, 3, 4, these four markets right here, these things are crazy to trade. Now, I actually have a seat on the exchange of these things. So what they trade like is they go like this. They go run, stop, reverse, run, stop, reverse, run, stop, reverse. Breakout, got you, sucker. Run, stop, reverse, run, stop, reverse, run, stop, reverse. Has anybody ever experienced that on the E-minis or on a stock or on an option where you think it's trending and it sucks you in there and then it comes back on you, just tries to hunt you down, kill you, stop you out, just to go in the same direction that you originally thought it was going to go? Happens a lot, right? So now you take a look at the bond market here. The 30-year bond moves about a point a day. It's worth $1,000. You can make or lose about $1,100 to $1,500 a day. Now, here's how the bond market moves. It goes like this. It goes up, pull back, up. Well, my little drawley thing's not working. Pull back, up, pull back, up, pull back, up, and then it'll retrace. My little righty thing's not working right. It's very, very calm. It goes up, pull back, up, and then it'll retrace. Crude oil, on the other hand, is bipolar. It looks like you can make more money, $1,800, but crude oil is bipolar. It will rip your head off, kick you while you're down, and kick you again while you're down. Silver is the widow's maker. It's worth $5,000 a point. This silver is also a little hard to trade. So two of my favorite markets that I try to get people focused on if you've never traded any futures at all is the 30-year bond or the gold market, because in my mind they're easier to trade. Yeah, the S&P will skin you alive, right? And it's really effective at skinning you alive. You're like, oh, look, another sucker. Welcome to the party. Sit right here. So gold, you can make or lose $1,800, and gold is a little bit different. So the difference between bonds and golds, you can do ETFs too, GLD, you can do TLT. It's very trending. So this is how the bond market goes. It goes up, pull back up, pull back up, pull back up, and then it'll retrace. So that's the bond market right here. This is the gold market. Up, consolidate, up, consolidate, up, consolidate. Now, there are other things like commodities, corn, soybeans, wheat, coffee. The crude oil. Crude oil goes like this. Crude oil goes up, down, up, down, up, down, up, down, breakout, 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 retrace, up, down, down. This is how the index futures go. Index futures go like this. Run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. Hey, we're going higher. Psych. Run, stop, reverse, run, stop, reverse. So you got to know the personality of each individual market that you trade. Okay, so it's really important to pick it. So let's just label these. Let's go A, let's go B, let's go C, and let's go D. Which ones do you think would be easier for you to trade? Because everybody in here is a little bit different, right? Which way? So I'm getting B's and C's. All right. There's got to be some counter trend traders in here, right? So B's and C's are going to be a little bit easier to trade because most people usually identify with trending trades that either pull back gradually and continue or breakout trades that consolidate and then go higher. They're just a little bit easier to trade in most people's minds. So let's talk about how to hold that winner a little bit longer. We've already talked about the difference between a sprinting market that goes run, stop, reverse, run, stop, reverse, run, stop, reverse. These are not your friend unless you're a counter trend trader. Now let's talk about marathon trading markets. Bonds, up, retrace, up, retrace, up, retrace, up, and then it'll pull back. Or gold, up, consolidate, and then retrace. Very, very normal. All right. Now, there are different sprinters in different markets. There's stocks, options, futures, forex, bonds. Each one of them have their own personality. It is your job to find the best one for you to trade. Start with the ADX and see who's got the biggest range, and then start with the personality of that market that you pick that has a good wide ATR, an average true range. All right. So I'm going to teach you a little bit about the basics of how to trade bonds. If you've traded the E-minis, how many of you have traded the E-minis in here, like the Dow, the S&P, the NASDAQ, or the Russell? Just the regular index futures. Good news is they basically are the same thing. They're just a lot calmer. In other words, the mechanics are the same. So they only have 3 months, like HMUZ, all right? And I trade the Euro Bund, I trade the DAX, I trade the Euro Stocks 50. I trade anything out there. If it'll move and I can make money on it, I'll trade it. If there was a market in Tic Tacs or toothpicks, I would do it. So I'm going to teach you a little bit about how to trade bonds, all right? And I'm going to get you up and running pretty quick. And I'm going to show you that trade that I just showed you earlier, and I'm going to show you how you can do it. It requires absolutely zero indicators at all. You don't even need a chart to do it. And that should excite you because there's no indicators to buy. There's no proprietary nothing. How many of you in here can count to 8? Give a show of hands here. Can you count to 8? Now, I'm from Kentucky, and I've got 10 fingers and 10 toes, so I can count all the way to 8, yes. Now, how many of you can count to 12? 12? Are we good to nails? Nails your hose, man. No shot. And can you also count to 16? So I'm going to teach you this trade, but before I do that, I have to give you a little bit of knowledge of how the bond market works in order to convince you that you should give it a try. All right? So the months in the futures market are very, very confusing. I'm going to make it easy for you on this 30-year bond trade that you're about to learn or discover. So January is F, which I have no idea what guy named these or female that named these, but they need to be fired, right? January is F, G, H, J, K, M, N, Q, U, V, X, Z. It makes no sense at all, right? So let's go through and actually cut through all this bull crap. So here's how this works. What we're going to do is we're only going to trade these months because these are the only months that are available for us to trade the bonds. Now, when I'm talking about bonds, I'm not talking about your grandpa's CD. I'm talking about a 30-year bond future, all right? Futures, if you're, in most cases, if you've never traded futures, they scare you because you're like, oh my God, futures just sound so risky. If you trade stocks or if you trade options, what is the thing that keeps you up at night? If you're a stock trader or an options trader, what is the one thing that keeps you tossing and turning at night when you're sitting there thinking about volatility? What else? Gap, right. And yeah, Michael, but if you get a gap in your direction, you're like, yes, thank you, trading gods. I appreciate that. But if the gap goes in your opposite direction, That's what really, really, really affects a lot of the stocks and the options trades. So if you don't have a small futures account, I highly recommend that you go get one. Futures, isn't that the end of the world? Right, exactly. You don't have to have a lot of money in a futures account. You could have, $3,000 to $5,000 in a futures account, and you can hedge a lot of your stock and or your options risk by going in the opposite direction of an index future, Dow, S&P, Nasdaq, and Russell, which is where all of your equities and your equity options are at. So this is how futures markets works out. So right now we're in December, right? We're in December 2014, I believe we are. In the second week, the Tuesday of the second week, we stop trading December and we begin to trade March, okay? So how this works is, for me, my symbol on bonds is called USH15. This is the year, all right? This is the symbol, SYM, and this is just the month, okay? That's the month. So when in the second Tuesday of March, I will stop trading March, and I will then become trading June. And then that symbol will be called USM15. In the second Tuesday of June, I will stop trading the June contract, and I will begin to trade the September contract, which will be USU15. Does that make sense? Does everybody understand so far? So this is just the month right here. This is the month right here. HMUZ. And basically, we've got about 3 months to trade each contract month, and then we have to jump out of it and trade the other contract month. So it's pretty simple to do. And if you don't understand how to do it, just call your broker. Rollover days, most of the time, your broker just rolls you out of them, so you don't have to worry about it. I've never met a broker that'll let you stay in one longer than you're supposed to. They'll just close it out for you and go, yeah, you're out of that trade. So there are the 30-year bonds, there's the 10, there's the 5, and there's the 2. We're going to focus on the 30-year bond. Okay, it's going to be HMUZ, March, June, Sep, DC. So right now we're no longer trading DC. We are now trading March. And let's take a look at when they trade. So the 30-year bond trades from 6 p.m. till 5 p.m. So they're open for 23 hours, which is good. The open outcry when the pit is traded is from 8:20 to 3 o'clock. And that's when there's actual guys in the pits. We call them dinosaurs. And they're actually trading those. So here's how it works. Here you can see this is at US is the symbol that I use. If you use TOS, your symbol is going to be /ZB. If you use other folks, just ask them you want to know what your 30-year bond contract is. You can see it opens up at 6, closes at 5. It's worth $1,000. Every minimum tick move is $31.25. It's actually $31.25, and it moves in 1/30 seconds. Here's where I'm going to lose a lot of it. You're like, oh, dear God, fractions. What? What? Does anybody remember trading stocks when it used to be in teenies, like 7/16, 5/8, stuff like that back in the day? I'm showing my age, obviously, a little bit here. Back in the day, we all had to do fractions in your head. And you're like, okay, is 7/8 bigger than 5/16? Or, oh, let me look at my Post-it note. Yes, no, yeah, you're right. You're teenies, right? So you do have to be aware of a few cautionary events where it's interest rates, any major market economic newses, or anything that's listed on a Econ Day that has a star next to it could potentially move the bond market. All right, it's basically like any other index, but it's a bond. So, like I said, this is the symbol on TradeStation, where it'll be USH15. On Infinity, it's going to be ZH or ZBH15. If you're a TOS user, then you're just going to go /ZB. That's all you got to know. All right, that's all you got to do. Do you have a service that I can buy for someone to help me set up TOS? You can usually just call TOS and they'll help you out. All right, so any questions so far on the months that we're going to trade? Does anybody have any questions on them so far? Because you got to know what months you're trading. Let me go back up here. I think we've covered that decent. Now, so we're going to trade March, June, Sep, Dec. We're going to trade March until the second Tuesday in June. Then we're going to jump from June. Then we're going to jump from March to June. So just right now, just worry about trading March, okay? Now, pay attention to this slide. This is the most important slide in this entire presentation. This is how the bond market works, okay? Let's pretend in this example that you are long at 135 on the bond market, okay? And if it goes from 135 to 135 and 1/32, so this is be like it's moving a minimum that it can move. We call that a tick. A minimum move from 135 to 135 and 1/32. How much money did you make? How much? If it moves from 135 to 135 and 1/32. All right, so you're going to make $31.25. $31.25. You got it. Now, if you go from 135 to 135 and 2/32, how much cash did you make? $62, right? $62.50. All right. Now, the good news is the bonds usually move about a full point. So if you go from, actually a little bit over a point. So if you go from 135 and you hold all the way until this thing hits 136, how much money would you put in your bank account? How much would you bank if you exited at that point? That's right, $1,000. $1,000 full dollars. Now, if you only risked $156 to do that, is that a good risk to reward ratio? Yes, it is. Now, how many ticks did it take you to make your $1,000? How many ticks was that? Pretty easy, right? So you go from 135 to 136, so you can say 31/32, so it's 32 ticks. So 32 ticks. Pretty simple, right? Now, the good thing is bonds move about 1.15 points a day. So that's over 32 ticks. If you want to make more money, just hold it longer. Hold it overnight. Hold it for a couple days. Hold it for 3 days. And on average, they're going to move about a point for you in one direction or another. Now, the cool thing about these things is they're actually different ways to chart these things and different ways to trade these things depending on your broker. So this over here is TradeStation. This over here is Infinity, okay? And you can see they're doing like 131, 31/32. Here they're saying 132. Here they're saying 132, 1/32. The same thing denoted on a different platform may look like this. 133.12 is 12/32. 133.13 is 13/32. So don't let any of that confuse you. I'm just showing you some things that may not match mine, but may match yours in a different platform. Just giving you a little bit of advice there. Now, let's go through intraday margin and overnight margin. Most brokers on the street will give you $300 to $500 intraday margins. Overnight margins on the 30-year is about $3,000. On the 10-year, it's about $1,500. On the 5-year, it's $750. On the 2-year, it's $304. The cool thing about this 30-year bond, you can do this 30-year bond trade on the 10, the 5, and the 2 also. You just got to modify it a little bit. Now, if you entered a trade at 9:30, okay, I'm going to put you the times here. The bond market opens up at 6 p.m. and closes the next day at 5 p.m., okay? So I'm going to give you a little cheat sheet. If you open a trade up at 9:30 and you hold it till 4:50, is that intraday or overnight margin? And this would be AM, and this would be AM and PM here. Yeah, it's intraday margin. Now, if you do a trade at 9:30 and you hold it till 5:10, is it intraday or overnight margin? Overnight for most brokerage firms, right? And each brokerage firm has their own individual rules. Now, let's say you enter a trade at 6:01 and you close it the next day at 4:59. Is that intraday or overnight margin? Intraday or overnight. If you entered at 6:01 p.m. and you exited the next day at 4:59 p.m. In most cases, it is considered intraday margin. So you would have intraday margin of 300 to 500, and you'd be in the trade for 23 hours, thereby making it easier for you to make money because you're going to do like a little crock pot trade. Now, if you do a trade at, say, 6:01 p.m., and then you hold it till 5:01 p.m., that's considered overnight margin. And that's fine as long as you know that, okay? All right, let's move on here. All right, here's the trade. Now we're going to get into the nitty-gritty. This is the trade you want to know about. It's called a reversal trade, all right? There are 3 different ways you can do this. You can do an 8, a 12, or a 16-tick reversal. Pick 2. Don't do all 3. If you do all 3, it just doesn't work, because if you do the 8, you're going to get stopped out on the 12, and then you can't do the 12. So for me, I do the 8 and the 16. For the sake of time savings, I only have 34 minutes in here, I'm going to teach you the 8 only. Just know that you can do it on an 8 tick, a 12 tick, or a 16 tick. I usually do it on an 8 and 16. Here's what we're talking about. This is how the bond works. It's very slow. It's very methodical. It's like watching paint dry and grass grow. What it does is the bonds will go up, and then it'll pull back 8 ticks and continue on its merry way. All right? And then it'll pull back 8 ticks and continue on its merry way. Now, the thing is, you don't know if it's going to be an 8, a 12, or a 16 tick. That's the reason I always do the 8 first. It'll also do up, pull back 12 ticks, and then bounce. Or it'll go up, pull back 16 ticks, and then continue on. Make sense? For this example, we're going to spend the majority of our time talking about an 8-tick reversal because it's the easiest one to teach, and it's the one I always do. All right, here's how you do it. This is all you're going to do. Number one, we already know the math. The math is terrible, or the percentage of this trade is terrible, right? But the math is really, really crazy good. So let's dig into the actual trades. Now, I'm going to push one more point through to make sure that you understand. You are going to lose some money on doing this if it only works 30 or 40% of the time, correct? So on this first trade right here, when I short something here and cover it here, what's that called? Strike one. That's called a loss. And I lost $156.25. Trade number 2 here, I lose again, strike 2, and I lose $156.25. At this point, you're going, man, you're a great trader. Now, I wait because I have 2 strikeouts in the intraday session during the day, and I go, okay, I'm going to let bonds open back up at 6 p.m. I steal to this, in this trade setup, I want to short this thing. You can see short, short. So what I do is I let the bond market open up. It goes higher, and I go, oh, bonds, you're going the wrong direction. I need you to go lower. And then I wait for them to go lower, and then you see this low right here? Then I let it bounce up 8 ticks, and then I short that. So this is called a hit. So strike 1, strike 2, hit. And here I'm risking 5 ticks to make 32, which is the risk is risking $156.25 to potentially make 1,000. So in this case, I short it here. I cover it here the next day. And now if you round this to 150, let's just say that's $300. $300 loss minus 1,000. So I netted about $700 on those 3 trades. That's not too bad, right? Now I know what you're saying. In your head, you're going, yeah, that's just one instance. Actually, no, it's not. Look at that chart. Look here. Would have worked here, would have worked here, would have worked here, would have worked here, would have got stopped out here, and would have got stopped out here, but also would have worked here. Now, why do you think this trade works so well if I do it in the overnight session? What is the one component, like if I'm short right here and then I cover right here, what's the one thing that you don't see in the midst of the middle of this trade? What's the one thing that can't mess with this trade? Well, here's a better answer. What messes up all your trades? What messes up all your trades? You, right? So for me, I'm in bed. I'm snuggled up to my beautiful wife, and I'm just laying there, so I can't jump out early, and I can't panic, and I can't second guess myself to go, oh, well, maybe, okay, get out. And then it goes in my general direction. So what I do is I just leave the trade on while I'm asleep at night. So first things first, we have to first identify which way the bonds are going. So in this example, thanks, Denny, I appreciate it. Let's pretend that we're looking at the daily first, because you want to start in the daily first. You see the massive up move here in bonds as it's going higher, higher, higher. You see where it broke this trend line, and then it sold off like crazy, and then consolidate, and then broke off again to the low side? Do we all agree that in this example, bonds are in a downtrend? Because that's how we're going to use the example. So we're going to say, okay, the daily on bonds is going lower on this PowerPoint. All right, so then we want to focus only on shorts. We're not going to do longs because we actually like money, okay? All right, so here's what we're going to do. Now, if we've got the daily going lower over time, we're saying, hey, the daily is in a downtrend, okay? So we're going to say, all right, sell off during the day. Then you can do this trade overnight or you can do it intraday. Then what we're going to do in this example, the bond market opened up at 6 p.m. Once again, this works intraday and overnight. We're going to let the market open up. We're going to let it drop for us, And then off of that low, we're going to count back 8 ticks. 1, 2, 3, 4, 5, 6, 7, 8. We're going to place a sell stop there. All right. And if it comes up there and bounces and gets us, we will then be short. We'll be risking 5 to make 32. Does that make sense? If we would have missed that one, we could have done this one off of this low. Now, the number one question I get is, how do you know that's the low? I don't. But if I had a price action that was going like this, 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 and then this, and then if I saw a price action that closed like this, I'd be like, okay, there's my low right there. And then if it then went like this, I would have to reset and go, okay, there's my low. Okay, now I'm 1, 2, 3, 4, 5, 6, 7, 8. Boom. Okay. Same thing. If you're going up, then I'm just marking the highs. That's only a 3-tick pullback right there, so that didn't work. Okay, this one goes up. Oh, there's an 8-tick pullback. Boom, and then I would get in there. All right, one more example. Let's do the math together because it's fractions, and sometimes it will confuse people. We are in a daily downtrend. We think we're going to go lower. The market puts in an intermediate high here, and then it sells off, so that we're calling this our low point. So 146 and 430 seconds is our intermediate low. What is 146? 430 seconds plus 8. Don't worry about the front number. Just go 4 plus 8 is what? What is 4 plus 8? 4 plus 8 is what? 12. So what we're going to do is we're going to wait for this thing to come up here. I already have a sell stop at 146 and 12 30 seconds. Now, what is 12 plus 5? We're going to short it here. And our stop is going to be 12 plus 5. Since we're going to enter at 12:30 seconds, it's going to be 146 and 17:30 seconds. Everybody got it? Now, if we entered it at 146 and 12:30 seconds, our sweet spot for the trade had better be 145 and 12:30 seconds, right? Pretty simple. Like I said, requires no indicators. If you can count to 8, you can do this trade. Now, I wake up the next day and I see, well, bam, I'm already up a lot of cash, and I can say, okay, what I can do is I can say I'm going to bump my stop down. I'm going to lock in 375 for the day, and then 2 minutes later, boom, I made 1,000. Now, right now, what I'm doing is I'm trying to do experimental trades for our members and go, hey, let's start actually widening out that target. Okay, we're going to widen out that target where instead of 1,000, we're going to go for 2,000. Instead of 2,000, we're going to go for 3,000. Instead of 3,000, we're going to go for 4,000. All right. So that is an 8-tick reversal. So we're going to go and do that trade here in just a second. I will show you on live charts. Okay. Before I do that, let me cover with you one more trade. There's another trade that I want to talk to you about, which is an intraday trade. It's called a sneak attack trade. So what you're going to do is you're going to do this trade as follows. Number one, that's 156 stop loss per contract, correct. So the next trade we're going to do is we're going to do the sneak attack trade. The sneak attack trade is a trade where you first figure out the daily trend. In this example, we've got it going down. Now, what you're going to do is you're going to look at the market from 7:20 a.m. to 8:20 a.m. and you're going to see what the range is like, okay? What the range is like. And I'm actually 26 minutes in. Let me do this. Let me go to this trade first because I want to show you live first before I get to this one. Let's do this trade. I'm going to show you right now. I've locked in $2,000. So I'm going to go to live charts. I would rather teach you this one as opposed to teach you the sneak attack just to make sure I've got you handled. So, all right, let me check the bonds. So on the 10-year, I'm up 156. I've risked 78. And then on this one, I'm at USH15. All right, this will be a good example. So let's say you missed this entire trade and you're not in this trade with me. So you're not up 2,500 with me and you weren't up earlier. So here's how I do this. What I do is I first go to, I'm actually in the Bund 2, which is the European version of our bond. Which is right here, the Euro Bund. I'm long at 153.49. So let's go at US. Which way do you have this right here pegged as? Do you think the bonds are going higher or lower based upon this live picture? Yeah, no chart. Well, you do have to look at the daily trend. I'm sorry, Brent. I totally lied to you. You do have to look at a daily chart to figure out the daily trend. So yes, you do. I'm sorry. All right. Does everybody agree that the bonds look higher on this chart? Okay. So then what we want to do is then we want to drill down into a smaller time frame, and we want to either buy an 8-tick, a 12-tick, or a 16-tick chart. So you can use whatever you want to figure out the daily trend, but you will have to look at the daily trend. I am totally sorry about that. Now, I'm going to trade the USH15, which is this contract right here, right? I'm already in this trade. So let me blow this up. Now, let's just use a 5-minute. It'll just make my job a little easier. It'll just look cleaner. Then what we want to do is, off of this, if we were just coming into this market blind and we said, okay, we think that the daily is in a solid uptrend, then what we will do is we'll say, okay, we're going to call this our most intermediate high. You see how I'm doing that? Because we're just flat. We're not long, we're not short. I'm already long, but you're not in the trade yet. So what you would do is like, all right, I think the bond market's in a valid uptrend. I want to buy 8-tick reversals. So what you would do is you'd say, okay, that's 143 and 23 seconds, right? So what would be your entry? We'll use the purple here. We'll say purple is our number that we're tracking from. Then what you would do is you'd say 20 minus 8 is what? What's 20 minus 8? And I'll do it with you right here. 12. 20 minus 8, 12. Right? All right. So what we would do is we would have a entry here at 143 and 12 seconds. Now, you could have done this right here. Look. You could have done that one. But since you didn't have, you can't time travel the last time I checked. But let's say that we're going to do this first trade. Now, if that's your entry would be 143, 12 seconds. What's your stop loss? 12 minus 5 is what? What's 12 minus 5? I'll make this red. We'll make these lines a lot thicker too so you can see them. 7. Okay. So here's your stop. Now what's your target? If you entered at 12:30 seconds, 143, then your target should be 143 and what? 144, 12:30 seconds. I'm gonna make this just a little bit bigger so you can see it. No. There we go. And the purple is just what we're calling our most intermediate high. Is where we're going to start doing our calculations. Right there, right? Does that make sense? Do you have the train burnt into your head? Hopefully you do. Now, if the 8 doesn't work, you can do the 12 or the 16. What I do is if the 8 works, I'm in the trade. If the 8 doesn't work, like in this case scenario, see how bonds have been selling off a little bit today? Then I would wait for a 16-tick reversal. Does it make sense? I'm going to open up the floor for questions. Can you show the same trade using TLT? Different creature, Michael. We're talking about futures, and that's an ETF. You can modify it to make it work for you, but it won't do an exact 8-tick pullback. What you could do is you could look at the futures and enter the TLT. Do you only do 8-tick reversals or also consider 16? I do both, Nick. How do you judge which to use? I use both. So on this, like if I wasn't already long today, if I went from these highs and I pulled back and got stopped out 8 ticks, then I'd wait for a 16-tick pullback. Is what I do myself personally. Does it make sense? So in this trade setup, if you would have counted from this most recent high, you'd have been long here, and you'd actually be up a few ticks. You'd be up about 8 ticks. Pretty simple trade, right? Not hard at all to do. You ought to be able to pull it off. Now, if you just look at the daily trend, here's a little shortcut you can do. You can say, okay, you can say, all right, I've got the high, the most recent high pegged at 20-30 seconds. And you just go, okay, there's 20. And just go back 1, 2, 3, 4, 5, 6, 7, 8. So you'd be long at, 12, 30 seconds. And then what I do is I've got this set up on my platform where anytime I enter it, I'm risking 5 and I'm trying to go for 64 initially or 32 or 128. But I'm risking 5 to make 64 on this trade. And you can see in this example, I've been in it for a couple days, and I'm locking in $2,000 profit, and I'm trying to go for $5,000 as my target. So I've risked $156 to potentially make $1,000. Now, look how thick these things are. They're very thick, but they're also very slow and methodical. They're not going to whip you around to death. They're not going to hunt you down and kill you too much. They are very, very, very methodical. Can you please repeat when you use an 8 or a 16? Nick, I use them both. I will do the 8 first, and if I get stopped out, I will then do the 16 tick. How do you pick the target of 5,000? I'm just going up. I'm just trying to make 5 points on the trade. David, is all I'm doing. So if you look at the target here on the trade, 145.31. If I go back over here to 145.31, for me, that's really close to that overall all-time high. And I don't want to go totally for here, but a few ticks below that, I'm cool with. Optimism. Yeah, so what you always want to do is you want to limit your risk and have an unlimited potential. You want to limit your risk and have unlimited potential. That's how you do really good risk to reward ratio trades. All right, let's go back to the sneak attack trade. I'll show you another trade that's easy to do too. It's on the bonds. Why not do more than one contract? Oh, you totally can, David. Anytime I put on large size, it freaks out people in teaching and education stuff. So I keep that all in my own swing accounts and stuff. I trade multiple contracts on everything that I trade. That's the smallest denominator that everybody can relate to is one contract. If you want to add 15 on it, brother, knock yourself out. All right, so let's talk about the sneak attack. Number one, you've got bonds pegged as going lower on your daily, right? Bonds are going down here in a daily trend. They're breaking down. We only want to do shorts. We only want to do shorts in this example. We're going to let the bond market open up. And here is the logic we're going to use with this one. We're going to look at the market from 720 to 820. 820. This is AM, East Coast time zones. Everybody follow? Just now, ZB up about 8 ticks from the bottom of the day. Should we go long? You should have already been long then. If it's 8 ticks from the bottom of the day, you've already, what you want to do is you want to be long on that pullback that I just showed you earlier. How many losses in a day do you recommend before finishing the day? So I'll usually take 2 losses intraday and 1 overnight. So Steve, that's a great question. 2 losses over intraday and 1 overnight. All right, for the bond sneak attack trade, you're going to look at the chart from 720 to 820. This one will require a chart. You're going to see where the low is at 720 and where the high is from 720 to 820. So it's basically 60 minutes. You want to see where the low is and where the high is. And what you want to know is if the range from 720 to 820 is 17 ticks or less, you can do the trade. If it's 17 ticks or more, don't do the trade because you've already missed out on it. East Coast time is right here, EST. Now, let's take this example. 145 and 21:30 seconds. 145 and 31:30 seconds. Is that less than 17 ticks? The range from 720 to 820, because here's your highs. There's a high, here's a high, and there's a high. How many ticks is that? If you take 31 and you minus 21, how many ticks is that? That's easy math. Is that less than 17 ticks? Yeah, it's 10 ticks, right? So that range in this first hour is going to be 10 ticks for us in this example, 10 ticks. Is that less than 17? Yes, that means you can do the trade. Now, we stated earlier that we're in a downtrending market on our PowerPoint example. Then what we want to do is we want to mark the low of that first hour range, and we want to short a new low. Now, if we short a new low, we don't get filled on the trade until right here, because the market goes up, but it goes without us because we're not interested in going long because we like money. Then we let it come back down. It goes back through the opening range, and then it bounces off the low, and then it makes a new low. We're going to short it right there. Our stop loss is always going to be 5 ticks, which is $156.25. And then our target is going to be whatever the first hour range was. So in this example, target 1 is going to be 10 ticks, target 2 is going to be 20 ticks, and then target 3 is going to be 30 ticks. So here you got T1, T2, and then T3. So let's go through it one more time. So from 7:20 a.m. till 8:20 a.m., you're going to mark the high and the low of that range. If it's 17 ticks or less, You can do the trade. If it's 17 ticks or greater, you don't do the trade. And then what we're doing is we've got it set as a daily downtrend, and we want to make it go through the low bracket of that range. When it does that here, the low is 145, 21, 30 seconds. So when we get a trade at 141 or at 145, 20, 30 seconds right here, one tick below 21, 30 seconds, we short it here. This is our stop loss. This is our target 1. This is our target 2. And this is our target 3. Again, going short because the daily point to the down market. Yes, that is correct. So any questions on the sneak attack trade? On the sneak attack trade. Sneak attack, early bird, whatever you want to call it. Points for targets. The points for the ticks for the targets are the range of the first hour. So if the range for the first hour is 15 ticks, I would risk 5 to make 5. If the range on this is 10, I'm going to risk 5 to make 10. Now, where it gets a little sketchy is if you've got a range of 5 ticks and you're risking 5, now it's a risking 1 to make 1. That's kind of crazy. So you just follow the plan, right? So I'm going to switch back over here to PowerPoint, and then I'm going to take some more Q&A, and then I'm just going to let you do symbol after symbol. I mean, I'm going to show you where it's going to go. Why 820 instead of 830? Isn't that the open? The bond market opens up at 820, right? So we're trying to get in there before the pit guys start paying too much attention. Yeah. Well, what are the percent our winners on the sneak attack? I haven't calculated in a while, Red. I will tell you, as it's trending, I usually make way more money than I lose, right? And on the percent winners, it's a little bit more important on this trade because every trade you need it to be at least a 1 to 2 or a 1 to 3 because it's not a 1 to 5 like the other trade was, right? All right, so you got to have confidence in order to have profits. If you don't have confidence, the profits will never come. You got to have some really good money management. You got to have some really good entries. You got to have a really good exit, and then your confidence will increase, and then your profits will actually increase. So you got to have some good setups. A good setup that goes executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Don't try to filter out all the losses and the stop outs. That is a fool's game and for suckers only. You can do the sneak attack on the TY. Enjoy the process. Work through it. You're going to have some wins. You're going to have some losses. Enjoy yourself. The slides are not updated. All right, so here is your special offer from me today. If you go to hubertsenters.com/pub, I'm going to give you the opportunity to learn more about low risk, high reward trade setups. Okay, and Yana posted it right there for us. So that's awesome. You're going to get my favorite trade setups right now, which is a value of $197. I'm going to give you a live Q&A session, and I'm going to give you a live trading session to watch me trade all these strategies live in front of you. Normal value is $391. You can call today or order if you go to that link. First 25 people will be $97, only $97. Now, I can only limit it to 25 people, and the reason I do that is because it's a really good deal. And 25 first people that order, you can have it. And I'll also throw in, if you order today, I'll give you 4 weeks of Technical Tuesdays so that we can actually go through what the market's doing. We'll meet once a week, all right? So I have no idea. I do a lot of stuff with Trading Pub. Me and Morgan are pretty good friends. Anybody in here already have this course? My favorite trades. Does anybody in here have it already? I'm sure some of you already do, right? You can also call the telephone number, area code 859-963-3445. So there's obviously no way that I can load in people, and I'm flying without a wire here. What'd you guys think? Denny, Z, Gary, Alan, good course, bad course, worth your money, more than you bargained for? Interested change of trading the market. Interesting change of trading the market. Good stuff, good info. All right, cool. So thank you. I really appreciate it. So when are all the meeting times? So they're usually, the live trading sessions are Monday, and then the Q&A sessions are usually on Tuesday evening. Good course, didn't try them all out, picked a couple, always deliver great value. Look, down to earth way to teach, thanks, makes sense. All right, cool, so I really appreciate that. So let me show you what's in the course, all right? So if you go and grab the course, if you haven't already got it, you should pick it up. You're going to get, as soon as you hit add to cart, and you'll see just an add to cart button, what happens is you're going to get a part 1, part 2, part 3, part 4, part 5, part 6, part 7. Each one of these parts are about an hour long. And then I've also got some pre-recorded live trading, 2 different sessions. And so you're going to get about 7 hours of content. Now, my promise to you, you have absolutely no risk on this transaction. All right, less than I paid. So there. So you're getting a better deal than Denny got. 100% satisfaction guaranteed, no question asked. If you don't love it, I don't want to keep your money. All right. I always over-deliver, and my goal is for you to get at least a 10x times your investment. All right. And less than I paid, and it was worth it. Thanks, Denny. I really appreciate that. Phone number again. I will give it to you in just a second. Here's a couple other reviews from people. Here's Neil. I had a great day. I made $1,980 on shorting the ZB, which is bonds and gold. I was up 350 on 3 contracts on the YM on FOMC trade, which is another one of the trades I teach you. But I held for too long and it came back. I'll be ready the next time. I didn't have my orb up yet. And then here's one from Pete. I just want to say, as usual, you lived up to your word. You more than over-delivered on this course. Took the technical analysis, Ichimoku, my favorite trades. Just keep the teaching coming again. Thanks for your time and effort. So here are the modules that you're going to get. All right, module 1, 2, 3, 4, 5, and 6. I'm also going to give you a little primer on Ichimoku. We're going to spend a little bit of time on that in just a second here. So here's what you get. Stock module 1. I'm going to teach you my favorite trades to swing trade stocks, intraday and overnight trades. Are these all futures? I do teach you how to trade futures, but it's not all I teach you. My favorite trades to swing trade stocks. The best way to scan the markets for day trades on stocks. How to filter the best trades to take. That's in module 1. In module 2, I share with you the 7 horsemen trades, which is 7 stocks that beat earnings 90% of the time. And then I also share with you 7 stocks that beat earnings 80% of the time. We go through stock gap plays, and we also go through gap and go and gap and crap plays, which are on the stock market. Okay. What I've done is the number one question I get is, what's your favorite trade setups right now? Now, my favorite trade setups right now are in gold and bonds because they're what's working really easily. But I always change depending on what's making me the most money. So what I did is I picked every market that I trade, and I picked 1 or 2 of my favorite trades out of that. E-minis. So I have a seat on the exchange for these bad boys. How to trade gaps on index futures. The ambush trade, the 85-115 trade, the crescendo trade setup, and that's a good trade if you want to do some overnight on the index futures. It's a really good trade. Module 4, E-mini day trades. Oh, this should actually be gold. It says E-minis, but it should be gold. On gold, I just taught a course I sold for $997. There were 8 setups. I'm going to give you 2 of those. The good night gold trade and the gold rush trade. This one we risk 300 to 600 to potentially make 6,000. So it's another low risk, high reward trade setup that I do. So actually, out of the 8, I'm going to give you 3. The good night gold trade, the gold rush trade, and the gold bug trade, all for $97. Okay, I just sold a course, Gold Trading Secrets, for $997. And then on the bond swing and day trades, I covered the overnight bond trade, which is the 8, the 12, and the 16 tick reversal. You can do it also intraday. And then we covered the sneak attack, and that is working in the 30-year and the 10-year. So here is your link once again. There it is, HubertSenters.com. The telephone number is area code 859-963-3445. Now, I've got 6 minutes, so we're going to do a little lightning round here. And you can ask me any question you want. I'll answer it. I don't really care what it is. What I'm going to do here is I'm going to bring up my chart package. Here's the link. If you don't know where the link is, I'm going to put it right up here so you can do it. And I know Jan and the team at Trading Pubs already got me covered there too. Throw me a symbol and I'll tell you what it looks like. Okay, TLT. So TLT is obviously the same thing as bonds. Going to go higher. Probably going to pull back to these most recent lows right here at 123.09 first, and then go to 126. Any indicators? No, you don't really need any indicators for any of those trades that I teach you. Nope. Most of the stuff that I teach in my favorite trades is indicator-less, but there might be one, I believe, but I don't think there is. I'd have to check. USD JPY on a daily here on Ichimoku is a buy right here at 117.84, and it's already met its target at 119.63. It probably takes out this level right here, which is 120.63. Let's see here. BABA. BABA, you can't read it on the cloud, but on the 60-minute you can. BABA right now is a short with a stop of 110. At GC, gold looks like a decent long. It's had 3 days above the cloud. Next target's going to be 1240. At CL, crude is a short. Crude's going to continue to go to 60. Our target was 60. It actually met it today, so that looks good. Is Hubert still spoofing trades on the dome and the GC? Yes, I am, Tom. I am still spoofing. You talking about the gold wiggle trade? Yes, I still do that. AAPO, I still do that at 6 o'clock when it opens up. Yep. Yes, I do. Apple is a short with a stop of 114.30 and a target of 105. USO, which is basically the same thing as crude oil, right? It's going to go to 22. JDSU Uniphase, back. That's a 90 stock right there. JDS Uniphase, decent long. Long at right now at 13.92, stop of 13.48, and a target of 15. AMZN, full disclosure, I'm long Amazon from $75. Amazon is a don't touch me, it's stuck in the cloud, leave Amazon alone. D here. Thanks, Tom, I appreciate it. Thanks. Let them know they're on the lookout. D is a decent long with a stop of 72.97 with a target of 76. Actually, Tom, I got a funny story. Like I got a note. They send you a letter like if you do too many cancels and replaces, and I got one from the CME going, "What are you doing? Stop it." It just means I had too many cancels and replaces when I was doing it once. It was pretty funny. At US, we already did that one. Obviously, the bond market looks higher. We want to buy 8-tick pullbacks on that. Silver at SI. Silver is in the cloud. I would leave it alone until it either breaks above the cloud or below the cloud. MCD, we're actually short McDonald's. We've already hit our first target. We shorted it at 91.10. We covered some of it at 98.92, and our stop loss is 92.01. If that helps you out. HFT trader. Yep, HFT trader. That's right. In Netflix, NFLX. I got 2 minutes and 20 seconds. Keep them rolling. Netflix is a short with a stop of 361, target 320. Twitter, TWTR. Twitter is a short with a stop of 39 and a target of 35. I did BABA. It's a short. IWM, which is basically the Russell, right? Yeah. IWM it's a better long than short, but the thing is sideways. You see this little funk it's in right here? It's just hard to trade. So I'd leave it alone until it broke above 118. Yep. SBUX. Here is the link, hubertsenters.com/pub. Telephone number is area code 859-963-3445. You can call that number. Okay. What's the next stock I'm up on? TLT. I thought I just did TLT. Yeah, TLT is a long. Probably going to pull back to 123.09. It's going to go to 126. TASR. Taser. Taser's a good long with a stop of 21.39. Target 26. Facebook's a good long with a stop of 74.73. Target 80. ORCL. Oracle is a good long. I would pick it up on a little bit cheaper price here. I would bid at 40.81 and a target of 43. I got Twitter. There's a price on PCLN. All right, I got 33 seconds. Price line short. Stop of 11.50. Target 10.50. 27 seconds. TSLA. Tesla. Tesla is a short. Stop of 223. Target 180. I got 20 seconds. Any last minute questions before I go? ES intraday. Hold on. ES intraday. Let me use this for this. ES. ES. Right now, ES is a long. ADX is in the rising position above 20, and the bulls are in control. I would be long the ES, and it's up 28 points. You already missed the move if you go long now, so be careful. All right, good luck. Hope it helps, and I wish you the best of luck, and I'll see you on the videos.
Well, listen, thank you so much.